Hi all, welcome to the daily charts. In this video, which will be a prolonged one, so this is definitely not a short video, we're going to discuss the strategy that I'm teaching, promoting, talking about, and putting to work basically on a daily basis. So the idea here is, as a day trader, you don't need to focus on any specific stock. You don't need to focus on big winners. You don't need to focus on big positions. You need to be focused on the strategy and picking the best plays long and the best or the weakest trades short. And how do you do it? It's very easy to explain. So first of all, let's sort out the candidates. For example, a day like yesterday, the market did absolutely nothing. So there was no like specific preference for trading longs or shorts. But what you can do is using a screener. Sometimes you have if your platform is a Moon platform, or you have a smart screener, use a smart screener. If your platform is not that smart, then use a simple screener. So you need to screen for the best stocks, and what are the criteria of the best stocks. Again, those are my criteria. Those are obviously changeable. So I'm looking for stocks that are above 6% to meet them in this list. Volume over 6 million shares, meaning I'm looking at a lot of liquidity, which is super important for day traders. I want the intraday range of the stock to be more than 8%. And I want the price to be over $10. I don't want to deal with the $5 stocks or stuff like that. So the idea here is I'm looking at liquidity, strength, and now obviously I cannot see it here. I want to see trend. So if the intraday trend is up, I would look for a long trade. I have the liquidity, I have the intraday strength, and basically that's all I need. Liquidity, intraday strength. The market did not matter at all yesterday. So if the market is down, obviously you prefer not to buy. And if the market is up, obviously you can focus on the leading stock. You don't necessarily need to trade out of a random list. Or random stocks out of a prepared list. So let's take a look. And here on the list, I have a stock like I don't know, LFS. That's a Japanese stock. Ended up 600% to the upside. That's not what I mean as having a strategy. So this is not a strategy to trade this stock. No. The strategy is to trade high volume stocks on entry points and specific entry points. I will give you an example. So let's take a look at one of the most liquid stocks that you could have traded yesterday. Let's take a look at RIVN. And I already prepared the setup, so we'll save some time. So again, earnings in RIVN, the stock is up. How do you trade it? Okay, keep in mind, RIVN is not a $400 stock. It's not a $5 stock. It used to be in the past under $10. Now it's a bit more volatile. Obviously, earnings report and some great news. I think it was also upgraded, but this is beside the point. We're looking at the intraday chart here. I'm looking at the 3-minute chart. I suggest you look at a 2-minute chart or a 5-minute chart. Not necessarily the 3, but again, on the Moon platform, that's what I'm looking at. The 3. Sometimes I will switch to 5. In the mornings, I can look at 1. 3 is fine. But the idea here is, if you're looking at something, you should be looking at the same thing, and you'll see the same pattern here at the support level of 1720. So the stock here is hitting for almost 40 minutes 1720. Okay, so we have an uptrend in the stock. Sorry, where is it? Here it is. We have an uptrend in the stock, a pullback, a move higher, a pullback, higher, pullback. You catch my drift. So by now, if you are a day trader and you're spending time on RIVN, you know that 1720 is very good support. Okay, so you can do one of two things. Buy above 1720 and you have a stop loss under 1720. or maybe try to short it under 1720, or maybe try both, a long over 1730 and a short under 1720. Obviously, I prefer to trade with the trend. The trend is clearly up in RIVN. So now the stock is moving higher and closes near the highs of the day at the end of the trading day at 18. So basically this is a 4% move. And you close the position as a day trader at 355 and you gain 4%. Now why am I talking percentages? Because let's say your account is $200,000 and you can buy here a 5,000 share position. Or your account is $10,000 and you can buy here only 500 shares. None of my business or anybody's business. The liquidity yesterday in RIVN was 100 million shares. So you can buy basically any quantity you want. It won't matter to the market. It won't matter to anybody. There will be absolutely no slippage on most of your quantities. I mean, as long as it is reasonable, like a couple of thousand shares on zero slippage. Maybe 2 cents, maybe 1. Okay, so now let's talk about your share. Instead of talking about a confusing number like shares, let's talk about your share position. If your share position is at $10,000, then you buy roughly 700 shares. But again, it's $10,000. You move up 4%, so you make $400 on this journey. This is $400. And again, if your share position is $20,000, you make $800. And if it is $50,000, you make $2,000. Okay, so the idea here is that the trade is scalable. The trade is limited in terms of risk because you can risk on this trade anywhere between 1/4 and 0.5%. 0.5% is 10 cents. A stop loss of 5 cents or 6 cents is 1/3 of 1%, and the idea here is that you get a risk reward of almost 8 to 1, which is amazing. And again, all of that from a not an amazing stock, but finding the right technical entry, using the support level as your stop loss, and closing it at the highs of at the end of the trading day, which is part of a strategy that I talked about, I don't know, in maybe 50 videos already. And I hope that at one point it will catch up. Some people are asking me, why wait until the end of the trading day? I'm taking partials, I don't know. This is the strategy that I'm proposing. You can take partials, you can add, you can do whatever you want, okay? But then it gets crazy because you can add, you can take partials. At one point you need clarity. Keep in mind that most of the time you are not managing only one stock. You have a couple of others. That's part of the strategy as well. So this is basically an easy trade, doable trade, scalable trade, anything like that. Okay, let's move to number. And again, anybody can do it. If you have a $5,000 account, you can do it. If you have a $100,000 account, no problem at all. Let's move to the second candidate, and I'm not, like I said, I'm not going to talk about a stock that's up 500%. This is none of our business. Let's take a look at, for example, at VTRS. That's a biotech stock. Now, one thing that it's important to mention is that you need to see the stock as early as possible. Now, how do you see the stock as early as possible? It pops up on your stock screen. Now, when a stock is up 5% in the pre-market, it is on your stock screener. When it's up 25%, obviously it is on the stock screener. Now, pretty much the same thing as the previous trade. Great liquidity, traded yesterday 12 million shares. Free float, more than 1 billion shares. So this stock is not, it's a $10 stock. But the $10 stock can move up 4, 5, 6, talking about percentages. So it's not going to move up $2, which is 20%. That's highly unlikely. But it can move up 40 cents, which is 4%. And now you buy a 10,000 position, 4%, you know already the answer is $400. You buy a 100,000 position, you know, you do the math. And the ability to scale into this trade is immense. Okay, so what is the big deal here? The big deal here is that the stock is moving higher without a big gap up, but it's moving higher fast on a gap up and go. Now, obviously, you can buy the gap up and go, but let's face it, how many of us, on Wall Street are focusing on VRTS at the open? We have so many candidates. Yesterday, we had the core wave down 20% at the open or something like that. I was watching core wave, for example. Why would I spend any sec? I didn't even know that this stock had earnings, basically, although I should have known. Anyway, because I'm not looking at those unimportant trades, but an unimportant trade shows on your screener, then you can see the stop loss of the risk here is less than 1%, let's call it 0.5%, but it doesn't matter. The idea here is that if you buy at 1060, you have 8, let's call it 10-cent risk, that's full 1%, and it closes at the trading day up 60%. Sorry, 60%, 6%. So this move is up 6%, let's round it to 5%. Commissions, whatever, although nobody's paying commissions in the United States. So 5%, you have a $10,000, it's 500, you have a $20,000, it's 1,000. The idea here that nobody cares how much you buy. The only thing, important part of the strategy is to wait until the close. That's super important, and buy with very little risk. That's also super important. And we have both qualities here on this trade on top of great liquidity, but that's already taken care of, because if the stock doesn't have great liquidity, it's not in this group of stocks. So just giving you two examples out of, I have a list here of, I already showed you the list, like 12, I think, 12 stocks that could have been traded. Some of them yes, others no. So again, if I'm going back to the list of stocks, this is not part of the equation of stock that's moving up 600%. It's not going to show on my list, okay? But a stock like Sunrun, which moved up 7%, could have been on my list. Or a stock like Xpeng, up 7%, could have been on my list. I mean, it's the same strategy if you know it, where you look where to buy. For example, in retrospect, had I been checking out on XPV, this is the area where I would enter, under 27. And the stock ends up at 28. That's also a 5% move intraday. That's 5%, this move. So again, it's not like trading a 5% stock or 3% stock or even sometimes 10% intraday is something that's not doable. It is doable, and the stock closing up at the highs of the day is doable as well. I agree. Many people, I think I talked about it, don't agree to this strategy. They want to sell partials, they want to add whatever, do whatever. It's, it's your account. You can do whatever you want. I'm just suggesting this calmer strategy where you're coming back or you're sitting there and don't do anything, and voila. If it doesn't work, worst case scenario, you lose your 1% risk on the trade, or 1.5% or 0.5%, or it comes back to the entry. So those are the possibilities. So let's move now to short plays, because I showed you already a couple of long plays potentially. Let's look at the short plays. Now, let's take a look at the core wave, for example. I know that it is a tough stock, a bit spready, tough trades. Not necessarily, at least on my platform, it doesn't show that it is shortable. So on the Moon platform, it's not shortable. Now, can you trade the core wave from the open? You can, but I myself, even in retrospect, not to mention live, I don't see now anything. I mean, it's so volatile and crazy and spready. Not to mention that it's not shortable. But let's say it is shortable. Where do you enter? What is the risk? So what I'm proposing is that if you are a day trader and you don't need to trade at the open, wait. You're only working 5 to 6 hours per day. It's not like you're into such hard work. Anyway, the idea here is that in retrospect, if you do have shorts, this is the area I would have suggested the short play. Under 90.50, the risk is 1%, meaning $1. You have the VWAP above. And again, it's not like it is an early entry, I agree, but it delivers some profits at the end. And the idea here is that if you lose money, you lose 1%. So if your position is, like I said, $20,000, you lose 200. Your position is $100,000, you lose 1,000. Your position is $5,000, you lose 50. And this is, again, scalable. The stock traded yesterday 76 million shares. Absolutely no problem in terms of scalability. Again, it's a bit spready, no shorts, and so forth. So again, those you cannot be focusing only on shorts, because many times shorts are not available, or they are subject to the uptick rule. So there are issues. Let me show you actually a trade that was way easier to pick up, and another stock that's again living up to our strategy. A gap down, then a reversal, then a very little risk on this trade being less than 10 cents, and then the stock moves from 13 to under 12, and then reverses, but again still delivers plus 5%. And the risk was 1%. So I agree. At one point it was 12%, a 12% winner, or 11% winner. You could have locked the 12, but again, the strategy is that you apply it at all times, the same strategy. So if you risk 1% and it comes down to 12, maybe it can go down to 11.50. You never know. I mean, it can happen as much as it can come back to the entry. Now, let's say it goes down to 11.50. Can you still keep your stop loss? Should you still keep your stop loss at the entry? No. In this case, you should lower your stop loss. Where, for example, you can lower it to this breakdown level. But again, this is now personal preference. Sell, add, whatever. I mean, this is also a great adding point, if you ask me. But again, I don't want to make this strategy complicated. Adding, and keep in mind you're managing other trades at the same time. So again, keeping it stupid simple delivers. And using 3 scalable trades, you can see that we easily reach our 10% target. I think on those 3 trades, the optimal target would have been anywhere between 10 and 15%. And again, not a big deal during the earnings season. Okay, guys, I hope it was clear. And again, I will get probably some heat from traders. Others will love it. Please, if you have any questions, you use our email or our comments section. Do like and subscribe. We'll love to have you in our mentorship sessions as well. And we'll see you in our next video. Thank you for watching.